Hello and welcome. Very excited today to be discussing a European investment offering on our marketplace with a new sponsor, very exciting new sponsor, Reward Properties. Now, Reward is a joint venture recently established between Newman Leach, the CEO of RE Capital, formerly known as GMG Real Estate, and John Rabie, renowned South African developer, investor, and the founder and chairman of Neworld Properties. Both RE Capital and Neworld have played in the European space for quite some time, European commercial real estate space for quite some time. And so they are bringing their two sectors of expertise together and have formed this joint venture, Reward Properties, to focus specifically on investment opportunities within Portugal. It's important to note that for Reward Properties, many of the key players are actually on the ground, located in Lisbon, and able to provide some incredible insight to our investor community today, specifically on this offering. Today, we'll be discussing Marvila II. It's the second development provided through Reward Properties. With us to further discuss Marvila II, we have Bradley Parker, COO of Reward Properties, and Olivier Hesselot, CIO of Reward Properties, as well as Alan Bell, their Chief Sales Officer at Reward Properties. We're incredibly thrilled to begin offering this European residential opportunity with an interesting and unique investment structure for our investors. I'll ask Bradley to begin. Bradley Parker?
As you can see on the screen right there, on the right, if you can see my mouse, that is Marvila II right there. You can see the Tagus River that runs all along there. So to your right, you get the Lisbon center, city center, and to the left, you've got Espoo, which is just over there. So we're very close to both of that. I'll get to another slide, which just gives you a little bit more proximity. Marvila I is right here in the foreground, and that is Marvila II over there. Investment rationale. So I'm going to start off the presentation, and I'm going to allow Alan and Olivia to jump in at different stages. But I will start off with this. So from an asset class, it's a residential development majority of, which is mostly residential above, but on the ground floor, we do have a section of retail. So there's about 141 units, which includes retail and residential. And then attractive location. It's an up and coming area in Lisbon. It's if those that are South African know the Woodstock area in Cape Town, it's very similar to that. It's an up and coming area, very arty. A lot of people live, work, and play in the area, and there's a lot of work from the municipality that's investing money into the area to see the area revive. From a risk-adjusted returns point of view, what happens in Portugal, you get what you call a PIP, which is basically getting your preliminary approvals. And again, for those South Africans in the room, it's basically getting your land use management approval in place before you start with the licensing process. So the good news is on this project, we've got that all in place already, and we are busy with the licensing process as we speak right now with the architects, and we should be submitting in the next 2 months. Exit values, again, we're adding value, and we believe always over the years, our philosophy is that our buyers follow us, as Johnny alluded to with Rabie Property and also Signatura, which we've got in Cape Town. A lot of our clients have followed us for many, many years. So we want our investors to follow us. We want them to reinvest with us. And we often see our investors making money on buying the units. So we've got a nice range of apartments from 190 up, and a large chunk of that is around the 550,000 mark. Leverage, only 40% senior financing projected within the 14 months of acquisition. So we have acquired the site already, and that's all in place. And as I said earlier, we're busy with the architectural approval application right now. Sales, Alan, I want to hand over to you just to maybe just talk around sales a little bit more in terms of buyers, investors, and how we go about that.
Thank you, Bradley. Good evening, everybody. Lovely to see you all, and I hope you all have a good week leading up to Easter. Marvila II, as Brad alluded to, and Newman and Johnny too, is coming on the back of Marvila I. Marvila I is literally on the other side of the street. And obviously already having that under our belts from the point of view of a CML license application almost complete, and a full marketing strategy about to roll out in terms of the actual end-to-end sales program, which is starting in about 4 weeks' time. We have had the benefit of probably 18 months of study in the area with regard to end pricing, rates per meter, typologies, and we certainly believe we've got Marvila 1 spot on. Marvila 1 leads into Marvila 2, Marvila 2 being perhaps a slightly strategically better placed location because it's much closer to the river. And it's going to be slightly less units, about 130 resi units versus 166 in Marvila 1. On the pricing, as Bradley said, and Johnny will concur with us at any time, we as a development company always leave crumbs on the table. We never launch a project at full price. We like to launch at slightly below market price and give our first investors into the project that benefit of being able to buy it below current market levels. We will do that in this process right throughout the process, and obviously on the strength of the about to launch Marvila 1, we feel very comfortable moving into Marvila 2 with about a year delay between the two from an end user purchaser point of view. Will give the platform to the investors with a leg up pretty much straight away. I won't take any more thunder on the sales until we come to the sales slide later on, but that just gives you a little bit of background between the current state of play and the launch.
Thanks, Alan. Just on the Delta Coffee, I'll explain that with some slides later on. It's easier to show it from a diagram point of view. Gross development costs is roughly 54 million, and the gross development GDV is 77 million on this project. Local presence, as we've alluded to, we have a team on the ground. I think our philosophy has always been that we are very hands-on type business, both Neworld and RE Capital, and I think that's why the joint venture works so well. We've got roughly 15 highly qualified and local managers on the ground. We've got in-house lawyers, we've got in-house accountants, we've got project managers, engineers, everyone is part of the team. So we form a great team on the ground, and we can visit the sites, we can touch and feel and be in Lisbon, which is always a big play for us. Market knowledge, I won't touch on that more. I think Alan touched on that already, just in terms of understanding our markets. We've been present, and so it makes sense that we know what we're doing in the area. Sourcing of transactions, like I said as well, we have a local presence, so we get a lot of deals that brought to the table. And with our track record and ability to move fast, Reward Properties are able to source off-market and distressed transactions very quickly. Again, ability to move fast, I won't allude on that more, but we've touched on that. Track record, I think if you look at all of us combined over the years, there's a great track record, and we believe that our investors want to see that, and they want to invest with people that have done this before. And the fact that all of us combined have done this on many occasions, I believe that stands most investors in good stead. In terms of Reward Properties co-investment, we always invest our own money as well. So plus minus 20% of equity gets invested into projects as well. Project presentation. So I'm just going to quickly go through some slides that will just give you a bit of a better idea of the project itself. As you can see here, the airport is very close, 5 kilometers from the site. Espoo, as I said earlier, is very close as well. There's hospitals, schools, shopping, you name it, in this area. There's also a metro station which is in Espoo. On the metro station, there's also talk of linking that metro station down to Lisbon downtown, eventually overland. So there's lots of expansion between the Lisbon CBD and the Espoo CBD, let's call it. And the city are spending lots of money on basically upgrading paths, running paths, parks. And this area over here that you can see is already upgraded parks and already areas that you can run, walk, cycle. And the idea eventually over time is that this whole strip, which is actually currently harbour, will eventually be changed and moved across the river. So that's a long play, but the whole area is changing drastically. Next slide. This is just a little bit of a better view of the project. You'll see again, I've touched on it earlier, Marvila 1 over here, 166 apartments. And Marvila 2, as Alan alluded to, roughly 130 apartments with retail on the ground floor. Okay, that's just an overview from above. You'll see Delta Coffee, as I mentioned earlier, they are on this corner site. So that is not us. Delta Coffee, for those that don't know, it's probably the Nespresso of Portugal. They're one of the biggest coffee suppliers in Portugal. a very well-known Portuguese family. You can probably get their coffee in 90% of coffee shops and cafes that you visit in Lisbon. So they are building a warehouse and head office in this area over here. And because it's one large site, the idea is that we submit our license together with them. We've already got a deal with them. And in fact, we've actually got the same architect, and they are using our architect to design the insides of their building as well. So there's a lot of synergies. You'll see there's another parcel, which is parcel B, the bottom corner. This was another site that was separate from the Delta and ourselves, and we've already agreed and purchased that from them. And I'll touch on that a little bit later on in the slideshow. You'll see that's now become us. Let me just carry on. Delta is there. Okay. Marvila 1 and 2 rendering. We've done some rendering. They're not final, but this is just to give you a look and feel. This is from the river. So you're looking back. That corner over there is Delta, as I mentioned earlier. And you'll see there's a green, we call it the green lung of the development. That distance from that corner to that corner is roughly 20 meters. And it probably runs 100 meters rugby field length of a lot of green open space. And what we're going to have is on the ground floor, we're going to have the retail that spills over into that space. And that space is also open to public. So people can walk and there's life. And with mixed use developments, you want life, you want work, live and play. That's the whole feel of mixed use development. Okay, this is just some other renders looking through from the sides. You'll see again, the white over there is the residential side, and then the retail's at the bottom. That is the green lung that I was mentioning. So you'll see landscaped and beautiful area for people to hang out and enjoy open spaces. This is a view up the road. The facade that you see, the old facade on the left, that is Marvila 1. So they are very close proximity to each other. You can basically walk across very easily. And what we will have over time is shared facilities that people can use between the two developments. Okay, business plan. Acquisition of Parcel A in November 2020, we did the final purchase of the whole site. So we own everything that was in red earlier. The negotiation to terminate two commercial tenants. We're busy with that process right now. So within our space, there's an architect and a garage that are still tenants, and we're busy negotiating and getting that finalized at the moment. Acquisition of plot B, as I said earlier, that's the one little section that we've just purchased, and the deal that we've done is that we only pay for that once we get our full license, which will be at the end of first quarter next year. Architectural permit, we're busy with that process, I've already said, so we're busy planning to submit that in the next 2 months. Marketing campaign, we will start to market this development at the end of Q2 next year, and the plan is obviously linked with Marvila 1. We'll make sure that we launch that once we've finished with launching Marvila 1. Horizontal properties, for those that don't understand what horizontal properties are, for South Africans in the room, again, it's similar to your sexual title register, and you need to do this upfront, which is also part of the licensing process. Construction tendering, that will also start once we've submitted our license, so that will start in the next few months, and we'll have a lot of time to go to tender and find a lot of good prices on the market. The good thing as well is because we're on the ground and we've built up good reputation with a lot of our professionals, we've got an external project management and QS firm that we use, and we've just appointed, I'll say just a year ago, Elshish Living, a contract of 30 million euros. So they're working on, when I say they, the DDN is the project management firm, working on plus minus 30 or 40 different projects within Lisbon. So we know that our prices and our estimates that we've got in our numbers are pretty well checked, and we're happy with them and believe that we've got enough in the numbers. Okay, as I've said earlier, Parcel B will pay for the final land of that portion once we get our license. Then from a construction phase, there's 24 months of construction period, and that's allowed for in the numbers. Okay, Alan, I'm going to hand back to you in terms of sales.
Thank you, Bradley. Thank you, everybody. As you can see, we have a great mix. What we do when we master plan any project is we take a considerable amount of effort into the research behind the typologies on offer. So a T0 means basically a studio apartment. The T1 is a 1-bedroom, a T2 a 2-bed, and a T3 a 3-bed. So looking across our range, you can see we well priced, very conservative entry level in terms of ticket price at 227,000, and that ratchets up right through the program into obviously the larger apartments. Ticket prices are incredibly important because they're a fundamental driver for the local market. Investors aren't too fussed about ticket prices. Investors are more concerned about yields, and to that point, we also offer a very competitive investment package to our purchasers. So, for example, in Marvila 1, we have a very good investment program offering where we offer a furniture pack and a rent guarantee to our investors who wish to take advantage of the settling in or vesting of a project for the first couple of years post completion. And that's always very well received by the investor community. The actual end user buyers don't really worry too much about investor packages because they want to live in the units. And that's why the ticket price then becomes important, because they will obviously go and compare our ticket price to a comparable project in the vicinity. Marvila, as Bradley has mentioned numerous times, is a very trendy and growing trendy area. Marvila 2, of course, will benefit massively on the about to be launched Marvila 1. We already have a number of the Marvila 1 units spoken for before the launch already, as Bradley and Johnny have alluded to. Johnny has a huge following in South Africa. Newman has a huge following in Europe, and we already have dozens of apartments pre-booked, and we'll roll out with a really good, we believe, offering on Marvila 1. So by the time Marvila 2 comes along in about a year and a half from now, once all the licenses and planning is in place, it will be, without a question, very well priced. And looking at these numbers, there's lots of fat in here and lots of future growth potential. The important aspect, I think, is to look at that third bullet point down, which mentions that 70% of our units will be priced below 550. Now, that is an important milestone because a number of our competitors in the area are already close to that price, and with limited units available, we're about to launch with a substantial amount of units below 550. So that is good kudos, and that is absolutely fundamentally why we believe Marvila 2 will be incredibly successful and will be well poised behind the Marvila 1 launch. Thanks, Bradley.
Thank you very much, Alan. Just to finish on the upside case, obviously we always have a base case and an upside case. So as you can see, there's a structured, regulated Portuguese collective investment vehicle that we're looking to put into place, which will obviously add value in terms of tax efficiency. There's a high sales price. So as we said earlier, and Alan alluded to it, that we like to start prices lower so that people really start selling as well. Being a South African with a South African cap on, we also like to de-risk in terms of sales. That's always been our philosophy. So we want to get as many sales from our launch and to sell as many sales off plan as possible. So as we sell more, we'll obviously look at the prices as we go along in different stages, which do vary depending on the project. Obviously, at the moment, all of our construction prices are all estimates. But as I said earlier, we're quite comfortable with those estimates because of the people on the ground and the teams that we've appointed. So we always need to have contingency. You never know everything that's under the ground, etc. But we're fairly comfortable, as we are also doing Marvila 1, as I alluded. So there will be a potential upside there. Structuring. I'm going to now hand over to Olivier, and he can continue with this section of the presentation. Olivier, over to you.
Thank you, Bradley. Hi, everyone. So the fun part of structuring. So for this transaction, we'd use, I would say, a standard structure we use for every other transactions. We are using a Luxembourg securitization vehicle, that's a vehicle in which we have several compartments, and we dedicate each compartment for a dedicated project, which means that the structure you investors will invest in ultimately is a completely ring-fenced structure. And if anything goes wrong with another project for whatever reason, this will not impact this project. So really, each structure for each project is completely ring fenced. So if we go from the bottom, so the Portuguese property will be owned by a Portuguese company, an SA. This company, that's the one where the bank financing will come in place, so at Portuguese level. Then this company will be 100% owned by the Luxembourg entity, and this Luxembourg entity will be 100% owned by the compartment of the securitization vehicle. We use this structure because it's a very efficient and tax-effective structure. It allows us to avoid to pay any unnecessary withholding tax, and it works. It's a proven structure which works very well. At the compartment level, we'll have two main classes of investor: the mezzanine investors and the equity investors. And the investment will take the form of a bond. So basically, the investors subscribe not in shares of the company, but bonds issued by the securitization vehicle. So quite straightforward and most important, ring-fenced structure.
Thanks, Olivia.
Great, thank you, Olivia.
And I think that's it. Thanks, Gabriella.
Yeah, thank you. You guys breezed through that. It's wonderful the time we're making. Something I do want to highlight for our investment community is that the opportunity and the offering that we have on our marketplace for Marvila is one that is actually unique to our community specifically. So as mentioned, this project is raising 5 million euros for equity and an option for mezzanine debt. But to spread this risk, this investment offering that we are offering to our community will invest 50% of your investment into equity, or excuse me, as equity, and 50% in a 3-year mezz debt at 9% per year. So this project in total aims to return a net IRR post tax and fees for our investors of 10.4% as a base case to 13.4% as an upside case, and a set cash on cash of 4.05% for 3 years, with that net equity multiple of 1.36 to 1.5. I know this is a bit more complex than the previous deals that we offered, but we felt strongly that we wanted to offer our investors this optimal opportunity to diversify into Europe, into a residential European option, but to spread their risk. So you are getting this hybrid investment opportunity where you are going to be able to have a split in equity and debt, which means that you are receiving income as well as an exit option with a high capital growth opportunity at close. So just something that I wanted to highlight there for our community. With that said, I think we should jump into Q&A. We already have a couple of questions from Sophocles with regard to investing specifically in Portugal. So I think I'll direct this question possibly to Alan or to Bradley, but if you can just talk about why we should be investing in Portugal as an opportunity right now.
Alan, being the salesman, I think I'll hand over to him. You're on mute, Alan.
Unmute. Okay, thank you. Why Portugal? There have been a number of reports recently from Knight Frank, Jones Lang LaSalle, and various others, just about how Portugal has coped, both in terms of growth as being a top 4 growth jurisdiction in the world in real estate, residential real estate only, but also in the post-COVID world, which is the dreaded C word we have to and cannot possibly live without mentioning. Portugal has started off as one of the best in the world, then collapsed spectacularly with basically the British pouring in here for holidays, giving us a second wave where we went from the best in the world to the worst in the world. We're now back again at being the best in the world due to draconian lockdowns, but it was the only way. We haven't been to a restaurant and had a Portuguese steak and chips for, I don't know, 7 months. We still can't eat and drink on the streets. They gave us the option of a cup of coffee a week ago for the first time in about 5 months. But with all that said and done, Portugal has again had a number of global reports about just how well it's handled and how it's been seen as a fantastic potential post-COVID global jurisdiction for settling in. And that's a big aspect, and everybody can research that. It's all out there on Google and YouTube. The other important fact, just two other quick points, are we have a very good non-habitual residency program, NHR, for non-residents who want to perhaps start to consider becoming residents. They can take advantage of a 10-year visa where their income taxes are pegged at 10% of their global income at source, i.e. where they're currently resident, and then by becoming Portuguese resident, their Portuguese income is fixed at 20%. So it's a fantastic global visa for 10 years, and it suits people who are able to perhaps be what we call the swans, spend 6 months in their home jurisdiction and 6 months in their holiday home in Lisbon or in the Algarve or wherever. So based on a good place to live, on a really good, safe climate, on a safe political climate, on a safe physical climate, and on the post-COVID upliftment, we believe in Portugal and we believe in Lisbon. I can't really comment too much about Berlin. Perhaps Newman might be able to give some aspect as to the comparables in Europe, but certainly what we're looking at the moment is a huge influx of money into Portugal.
Maybe if I can add also, so I'm not a salesman, but I mean what's really interesting in Portugal is really the fundamentals of the country, because so first from a geographical point of view, it's very well located because you've got you're on the far west of Europe, so you've got direct flights to the US, direct flights to Brazil or the south of America. So that's on a geographical point of view, very well located. Then from a transportation point of view, the infrastructures in Portugal are really good, because when Portugal entered Europe, Portugal received a lot of subsidies from the European Union, and they've been very clever because they invested all this money into infrastructure. So you've got great road network, very good train network, also very good airports, very good harbors. So really all the transportation network is really good. Then also all the medical system works extremely well in Portugal with very good health coverage. So I mean, for example, for around €100 per month, you've got a very good private health insurance, which may make a huge difference, for example, for a US citizen who is used to pay a huge amount of money for his health system. In Portugal, it works very well, and it's quite affordable. Then also the people in Portugal are extremely well educated. They are very good with languages. Most of the Portuguese people, they speak like fluently 3 languages. They speak, most of them, perfectly English. So it's very easy for a foreign investors or a foreign person who wants to visit or live in Portugal. That's a key argument. Obviously, the weather, that's the cherry on the cake. Very nice weather. Portugal is quite often called the California of Europe, which is true. Very nice weather, nice beaches. So that's also add to all the fundamentals I just previously mentioned.
Gabrielle, if I could just jump in there.
Sure.
As both Alan and Olivia alluded to, Portugal's really emerged within the EU and globally as a country that people and companies want to invest in and live in. And for so many reasons, you know, when we started investing in Portugal, one of the areas that we looked in obviously is all the macro the macro environment, and looking at the micro environment of where we focused in Portugal, in Lisbon. There's always a common denominator, and that is a structural shortage of accommodation. And I think talking about the rest of Europe, including Germany, that same fundamental issue exists throughout Europe. And I think for us as a team, though, we have boots on the ground. We've got 12, 13 individuals, experienced real estate professionals in Portugal. We have, as a company, been investing in Germany in the commercial office sector and the retail sector. We've recently also looked at, we looked at various opportunities in the residential sector. But at the end of the day, Johnny and I decide, we're focusing in the areas of our speciality where we've got people on the ground, because real estate investing is really a local business and you need to understand the dynamics of the local market. So I can't really compare an investment in Berlin versus an investment in Lisbon. I can tell you that there is a common theme, shortage of supply, but at the end of the day, execution is key. And we've got the team to actually execute on these opportunities. And that's why we fundamentally believe and invest in our own deals in Portugal.
Absolutely. Thank you so much for that, Newman. And adding on to that, if you can talk a bit about, you mentioned boots on the ground, just elaborating on how you are planning to offer rental guarantees and property management, specifically with Marvila. There's a question here from one of our investors related to management teams and managing the rentals in this space, if you are going to be offering rentals, and just understanding that component of this deal.
Absolutely. We have a brilliant team, and that operates under the brand called Mirabilis. You can go to our website. It's mirabilisapartments.com. They currently manage a number of buildings in the UK, and they set to launch in Lisbon at the end of 2021 with one of our other buildings that we handing over in September. They'll be moving to the second building, Alex, living middle of next year, and the third building that we'll be operating will be Marvila I, and the fourth Marvila II. So we'll have a fully fledged offering on the ground, a team of highly experienced individuals who rent both for hospitality, short-term rentals, long-term rentals. They'll take charge of the condominium, managing the entire process seamlessly, from monthly reporting to our underlying investors. And in terms of the rental guarantees, as Alan may have alluded to, we offer this to our foreign investors who want us to hold their hand during the implementation phase once a project is launched. So we typically would offer some investors a 4% guarantee per annum over a 2-year period. And that's worked extremely well on our previous projects, and we'll do this on this project as well. So investors know that they'll receive a 4% gross per annum for the first 2 years.
Fantastic. Thank you so much, Newman. Talking a bit more about the project post-construction, Bradley, can you just elaborate on that timeline in a bit more detail for us?
Yeah, sure. Post-construction, as I said earlier, we're busy with the licensing process right now. So the earliest we'll start breaking ground will be middle of next year, and then you've got to add 24 months onto that. So last quarter of 2024 is when we'll start handing over apartments. And so what we normally do, because of the scale and the size of the project, on all of our projects, we hand over in different blocks, because you can't hand over all the apartments all in one go. So you normally take 1 or 2 blocks per month, and you'll do it over a 3 to 4 month period. From a licensing point of view, there's quite a long procedure in terms of getting use. They call it a use license. So we obviously are very hands-on in terms of that process, and we make sure that we hand over those apartments well desnagged, etc. as well. And then, as Newman was saying, a lot of our clients do look for the rental guarantee. So what happens then is actually we handle that for you entirely, because then what will happen is Mirabilis will take over that, and we'll hand the apartments to them, and they will look after all of that for you going forward. So it makes it a lot more seamless and easy from that perspective, especially a lot of our buyers are investors from all around the world. Quite a large chunk has been from South Africa. So a lot of people don't want to have to deal with the flying over here, taking handover, all of that. We can handle that for you on your behalf as well.
Yeah, and this is also a very good competitive advantage that we have compared to other developers in Portugal. This full furniture pack, rental guarantee, and management, and offering the management services afterwards. This also brings a lot of value for end buyers of the apartment.
Correct.
Thank you. One final question on my end, and then I would encourage our attendees to ask any questions that they have in the Q&A box. But this is specifically for you, Olivier, around bank financing and structuring. You mentioned this briefly, but can you just talk a bit more about the bank about the bank financing and who does this in Portugal? And maybe just a bit more on how the investment is structured from a legal point of view.
Yeah, no problem. So usually the way it works in Portugal for development financing is that most of the time the developer has to acquire the land with full equity, full cash, and then the bank financing will only come afterwards. Basically, the bank, they want to see that the developer has sufficient financial strength to first to secure the land plot, then pay for all the working capital until the construction permit is approved, or the first phase of the construction permit is approved. And then only after this point, most of the time, the bank comes into play. In terms of, I would say, average or standard terms, the bank usually they really like to finance 100% of the construction costs. And that's a kind of guarantee for the bank, because if they cover all the construction costs, in a sense, that's a guarantee for the bank that the developer will not run out of cash and will not finalize the construction. So that's a lesson that the banks, they learned during the previous crisis. So now each time we apply for a construction financing, we apply for a full hard construction cost financing. Most of the time, the bank also covers part of the soft costs, so like the brokerage fees or project management fees. And then when you are a very good developer, you can also negotiate with the bank a refinancing of your original purchase price, which is basically what we've done on all our projects so far. We've been able to refinance between 40 to 50% of the original purchase price. But that only works when you have a good relationship with the bank and you've got a good track record, because obviously it adds a little bit of risk for the bank. But we've done that on every single project we finance with the bank. Most of the time we work with local banks because there are few really big international banks in Portugal. So we work with local banks, and then the terms, the financing terms are very, very good especially compared to South Africa, because the spread, so the interest rate we pay on our loan is around 2.5 to 3% spread. So above the LIBOR, which is currently negative, so we have a floor at 0. So we pay only 3% interest rate on our construction financing with no amortization during the construction period.
Wonderful. Thank you so much for that, Olivier. And we have a question here from Derek Rush on the processes in place should the project not go ahead, or should it be delayed for whatever reason beyond those 4 years. Can you just talk a bit more on risk here and address that question from Derek?
I can start. So to mitigate this risk, so as Bradley mentioned during the presentation, we have in Portugal what is called a PIP. So a PIP is like a light preliminary construction permit, and usually so you submit this to the authorities before you re-engage with the deal or with any development. And usually when you apply for this PIP, you mention in it the volume of your project, the use of your project, and the main, I would say really the main criteria of your development, but really mainly the use and the volume, so the height and the floor implementation of your project. Once this PIP is approved by the municipality, this is binding, which means that the municipality, they cannot change their mind afterwards. If they approve this PIP, as long as your final construction permit is in line with what was agreed with the PIP, the municipality cannot refuse your full construction permit. So that's a way for us also to mitigate the risk, because we know that if we submit the construction permit within what has already been approved and which is binding, then there's no reason for the municipality to refuse it. So that's on one side. Then on the other side, we are also willing to offer the investors a sunset clause. So we take the responsibility that if within the next 16 months we've not received the architectural permit, which is the first phase of the permit, but the most important one, then we are happy to reimburse the investors.
And thank you, Olivier. And then one final question from Adrian on the golden visa requirements. So Alan, I think this is maybe something that you can address.
Certainly can. There's been a lot of talk recently about the golden visa program. For those who are not really up to speed totally, the golden visa program actually in the city centers of Lisbon and Porto ceases to exist from the end of this year. That therefore means that Marvila II, which is only launching next year, clearly by definition will not fit into the current golden visa regulations. Therefore, if you are looking for a golden visa, you have other alternatives. We will be launching our own private equity fund or venture capital fund. Newman can chat on to that a little bit if he wishes to. That still gives investors then a chance to participate in the now famous golden visa program of Portugal. But Marvila II, from a pure investor point of view, will not qualify, I'm afraid, post December 31.
Excellent. Thank you, Alan. And with that, I don't believe that we have any further questions tonight. I do want to thank our group of panelists for joining us today. Again, so wonderful to have all of you with us and answering these questions and presenting this incredible offering. And then a huge thank you to our community for your time and engagement tonight and the incredible questions that you asked tonight as well. With that, thank you, everyone. I hope you have a fantastic evening and keep in touch. We look forward to offering this marketplace offering to you.